I would argue that these programs and VCAP, Renewed Vicky, they are an anomaly in what the government pushes out in terms of initiative. And there's no reason why they should ever disappear. They should just adjust.
Kim Furlong kind of stepped in it in May. On the same day that Minister Mary Ng announced RFPs for a renewed venture capital catalyst initiative, VCCI or VCCI, the CEO of the Canadian Venture Capital and Private Equity Association was quoted in the Globe and Mail saying that not only would this be the last time we'll see a major fund-to-fund initiative from the federal government, but giving a commitment that she would not go back and ask for another general fund. It was a bit awkward given that the Globe story actually came out before the initial announcement, which contained no mention at all that this would be the last Vicky Canadian Tech would see from the government. Again, governments don't generally announce intentions to not fund things, but sources BetaKit spoke with indicated a belief that this in fact wasn't the case. And still, the question remained. Why was the head of Canada's Venture Capital Interest Group announcing, a week prior to CVCA's annual investor event, that she would no longer advocate for a program that she once said Canada's innovation sector would be severely weakened without? Well, it's December now. Vicky fund managers have been chosen, at the very least, and Kim Furlong joins us on the podcast to review the year in Canadian venture and perhaps clear the air. On this episode, you'll hear Furlong renew her commitment to Vicky and give context to her past statements. As Furlong notes, getting a VCCI renewal into budget 2021, this thing is way behind schedule, was a climb. And she talks a lot on this podcast about communicating the value of this program to policymakers during both a global pandemic and our recent funding boom times, which are now over. But that's not all we talk about. There's also the details of the program, like the change to funding commitments, the focus on emerging fund managers and what that means, BDC's role and the value of market-driven approaches to backing innovation. Oh yeah, then there's our overview of Canadian venture in 2022 and what's in store for 2023. It's an action-packed episode filled with my favorite topic, VC inside baseball. So let's dig in. Okay, Kim, thank you for joining us. And I think where I want to start is by having you, for people who are not familiar with your role, describe who you are, your role at the CVCA, and maybe even what the CVCA is, because we're going to go one layer above most of the coverage that we normally have on BetaKit and most of the conversation that we normally have. But you sit in an interesting position of where all the mechanisms that inform what is reported on BetaKit actually happen.
Yes, I like to joke, Douglas, that I don't have any money, but I know all the people that have the money.
I make the same joke. That's awesome. We're in the exact same position.
CVCA is the organization that represents private capital in Canada. We have investors from coast to coast, and we're a GP organization. So our mandate is to support and assist and accompany GP in what they do every year, general partners, and in their everyday business. We have LPs and service providers that are part of our organization. And we basically do a few things. We push out on a quarterly basis all of the transactions in the market, and we'll talk about that today. We bring people together. Our signature event is Invest Canada. This year is in Vancouver in May, and it brings together about 700 people for 2 days. And it's business development, and it's people networking and looking for co-investors and a number of other things. We assist our members with educational offerings. We have a partnership with the Ivy School of Business. We have one on governance with the ICD, the Institute of Corporate Directors, and we just try to create moments and tables and conversations where people can share and learn from each other. And the last thing, and the reason I have this job, is that we advocate. We advocate on behalf of the ecosystem and our members to have the best possible conditions for investing. And my background is in government and not in investing. So I come to this job with this idea of what is the narrative? How do we tell the story of this sector? How do we tell the story of why this sector really matters to Canada's economy today and in the future? And how do policymakers who are thinking about different laws and regulation factor in the importance of the sector to Canada's future.
Yeah, I think I really want to get into that kind of liaison / advocacy role in the back end of our conversation. But first, I think we need to start with what the actual narrative is. And particularly as we're closing out 2022, we're going into a new year. And compared to past years, like if we were to do a year in review, this would be a bit of a really sad trombone sound. Now, obviously, we've been covering the CVCA's kind of quarterly and annual reports here. We just covered the Q3 report. We're kind of currently in what I assume is going to be a very, very quiet Q4. Do you want to give us the current, I guess, state of play when it comes to venture capital investment in Canadian tech right now?
I'm always glass half full, so I'm not sure if I would say trombone. Definitely not 2021.
Yes.
So last year we closed 2021 at $15 billion invested in Canadian companies. This year, so far in Q3, we're at 7.2 billion. And we should see a few more dollars come in, but not another $1 billion quarter. Like if I look at the weekly roundups, we will fall short of 2021.
Mm-hmm. I think in Q3 it was just under 900 million Canadian invested across 144 deals.
Yeah, 186 and 96. But if you look at it differently, if you say, okay, before 2021, our high watermark was 2019 at 6.2 billion for the year. And now we're at 7.2, trending with a few more $1 million to come in to round up the year. Is 2021 an anomaly? And we're actually, an historical average kind of trending up and continuing to grow. And 2021 was just this moment with a lot of available capital globally, new business models and injections of capital by governments, people seizing on these COVID companies, tech really doing really well in public markets, and a confluence of events in terms of like even COVID and life sciences and ESG being top of mind for everyone. So every vertical in venture adds some kind of momentum. And so I think what we need to think about is how do you frame this year and how do investors go into 2023, 2024, 2025 as we prepare for this economic correction? When we look at the fundamentals of Canada's innovation ecosystem and investors, it's much different than what we saw in 2008 and 2000. So the market is different, we're more mature, and we're going into this equipped differently. And I think I tend to lean on the positive. Not that it's going to be easy, but that we're better prepared than we have in the past.
Yeah, I think it's a fair point. And we've had several guests on this podcast who have been in the ecosystem long enough to remember when things were the way they were before to try and draw that connection. I think it's significantly harder for people new to this ecosystem who have maybe only raised around or just used to the line going up. I'm just wondering, can you directly attribute where the drop is coming from? Is this a drop by stage? Is this a drop by foreign direct investment? I know one of the things that really seemed to fuel 2021 and the explosion of investment in Canadian companies wasn't necessarily an explosion directly purely in Canadian investment in Canadian companies, but foreign investment from the US really exploding here. When you're tracking where the momentum is slowing, where are you seeing it slow?
When you ask me to what you can attribute the low numbers and in this kind of dip, if you look at Q3, there are very few mega deals. And if you look at 2021, it was like one after the other. So you can easily do a parallel in terms of the big growth cash injections. Those companies will continue to emerge and to get these dollars. They may not be as frequent. And in terms of the foreign capital, to round up these rounds, you, in many ways, need to have bigger sources of capital. If you're going to do a $450 million round, it's not uncommon to see a US player come into that to beef up the GP participation just because of the number of people in Canada that do growth.
I think the point on the mega deals just not being there, we're currently seeing is those companies who had raised those rounds generally cutting back on staff right now. But when it comes to the kind of foreign investment, is there any difficulty in tracking that and getting a pure sense of what's happening? Because correct me if I'm wrong here, but I believe that CVCA will only track deals that involve some Canadian VC. So is there an element of maybe the foreign investment here that's continuing that we're not seeing qualitatively somehow? Or do you feel like the numbers currently reflect what you're hearing from your members?
Well, you're right, Douglas, that we only report on deals that are done by CVCA members, and it has to have an element of Canadian investing. So if one of our members invests in a company in France or in the US, it wouldn't make our data points. Invest in Canada, which is the government body or agency that tracks foreign direct investment and as a mandate to attract FDI, usually puts out every year their overall, and I haven't seen those numbers. Last year, they knocked it out of the park. This year, question mark. Anyone who's thinking about these quarters over quarters and even FDI, the lead up to a transaction taking place is months in the making. So you could still see a fair amount of activity in FDI being reported that these conversations started last January with different entities around the world thinking about Canada as a place to invest. Same thing when you see our Q1 and Q2 of this year, huge quarters. And those conversations with founders did not start in Q1, that's for sure, did not start in that quarter. They started last summer, conversations over like fall and negotiations. So there's always a lag time in terms of what you see in terms of funding rounds that can be attributed to the activity of the quarter that preceded.
But you've noted, I think in the Q3 report, you expect the current scenario to continue not only into Q4, which we're currently in, but into 2023. Is that coming from trend analysis, conversations from members, data that you're collecting now that will then be kind of like thrown into the report? Is that a data analysis or a vibe check, I guess is what I'm really trying to ask you?
I think there's some data. CVCA does a survey on fundraising intentions every year, and my team has collected this data and is currently putting it together. And I saw just before Q3, I saw the raw, and you could see that the fundraising, in some instances, some people it remains unchanged. Some people who had a fund of a certain size and had probably signaled that they were going bigger may stay closer to that fund size for their next one. And then the conversations, even the people that have dollars to allocate in terms of LPs and the GPs that are sitting on commitments are slowing down. Everything is slowing down. And the biggest metric that I see is the time of due diligence.
Are you saying that diligence is returned? Because we just had Laura Lenz, we were talking to her at SAS North on this podcast, and she was basically saying 2021 didn't have any diligence, and it seems like there's been a return to normal. Or are you saying that there's additional diligence going on right now because the amount of capital being deployed is net smaller than it normally would be?
Yeah, I'll echo what Lauren said. It's returned to normal. Where you could see, and I'm inferring now in the future, are companies that are not creating cash, that are aspiring, selling the vision and the dream. The diligence on that could actually be a little bit longer, which wasn't the case in 2021. People were seizing and just like taking a chance and betting on founders.
Well, that's interesting. You noted in the report that early stage has kicked up a bit or was a strong point along with clean tech. I'm wondering, is that just relative to the growth stages, or are we actually seeing an uptick? Are investors returning to earlier stage companies, smaller bets down the line? Is this a qualitative thing, or is there just some quantitative consideration that these deals are just happening at a more regular pace than the growth stage deals?
I think it's too soon to tell. I think there was a lot of activity in the quarter. I don't know that people have reverted within one quarter to change the size of deals that they were doing. I think we'll be able to see in Q4 and into next year if the momentum continues. But we were seeing, even over the last year, a strong contingent of people playing in the seed and early stage. When I'm in Ottawa, that's really important. Like, you want a really strong early stage seed investment community because that creates your pipeline. And it's essential. Without it, you can't flourish, you can't grow, you can't build. It's at the core. It's foundational to what the sector is.
We're going to get to, I guess, the pipeline conversation and the early stage support and what that means in the second half. But I think right now, just let's clearly articulate what role CVCA has in this kind of market, what support you're providing to firms. Is it purely just tracking the vibes? Are you just in conversation with them? Or are there any things that they're looking for from you when it comes to support?
So we do a number of things. We don't just have conversation. The first thing that's very topical and timely is the 50. And I was in Montreal last week, and a lot of people are asking me, what is this thing? It's new. It's the second year that CVC has done it. And this was an initiative that was specifically aimed to help GPs that fundraise, for people that can fundraise and have LP commitments, from people that can believe that they can attract LP commitments from outside the country. We've put together this list of 50. It's not the best 50. It's a compendium, it's a grouping, it's a spotlight on 50 interesting and notable firms that are operating in Canada. And the document and the product has been created to put in the hands of Canadian trade commissioners in very selected cities around the globe and have them use this as a calling card to say, you should think of Canada as a place to diversify your investments as an LP and as a place where there's something very special happening in terms of venture capital investing.
Okay. So like you had mentioned Investing Canada before, is this kind of like a parallel Invest with Canada type initiative here? Like a C100 to garner more either LP investors coming in or maybe co-leading investments from foreign investors?
So Invest in Canada doesn't go out there and look for VC investment and LP investments. They're really looking for foreign direct investments. So companies coming and setting up shop here and doing investments here as tangible assets. So the Trade Commissioner Service, which is also a portion of Global Affairs Canada, and CVC have a relationship, and we've had a relationship for many years now, where there's someone from the Trade Commissioner that sits within the CVC office, and their mandate is to connect the government representatives around the world to the Canadian ecosystem. We have events internationally in Europe, in Asia, in the US, and we bring our GPs to meet other GPs and LPs. And the 50 was a creation that was done during a virtual world where we're like, okay, how do you get these GPs in front of international LPs? And the goal of most GPs is to diversify their LP base. And so CVCA helps in that goal of trying to put them and put a spotlight on them in front of people that they would not necessarily run into by going to an event in Canada. So we do that. And then I know you'll want to talk about Vicky, but the Fund to Fund programs is something that also CVCA over the last year has been very active on. And we believe that these programs are, well, they're uber successful. I would just maybe note these two things, these two initiatives where CVCA plays an active role.
You said the magic word. You said VCCI, Vicky. That's definitely going to be the second half of our conversation. And for anyone like listening familiar with past conversations we had about this, like Dedoy, obviously we're not necessarily saving it, but we want to talk about this other important context before we get there. I want to stick with the 50 and particularly just maybe just the LP circumstances and the reasoning behind the strategy, I guess is maybe the best way to put it. Because we've seen definitely an explosion of direct investment interest over the last couple of years. Obviously, the LP ecosystem is a little bit different. I know, again, reaching out to other VCs, I know that'd be like, if you could put a question to Kim, what would it be? I guess they were wondering why the LP market in Canada is so bad right now. And they were using the example of teachers investing more money in FTX than like Canadian VC, which obviously there's some bad blood there. There's also a note that, FTX probably not the best place to put your money, but to expand this out and just tackle maybe some of the, I don't want to say politics, but maybe just the requirements for some of these LP investments. Can we actually satisfy US or other foreign LP investors coming in, given that the Canadian LP investors that we have right now have sometimes pretty handcuffed requirements on what percentage of funds they need to be, whether or not government investment is involved, possibly like they have certain commitments on investing in Canadian capital. Are we set up infrastructurally right now to support a lot of foreign LPs coming in alongside Canadian LPs? Or is this going to be a separate kind of tier?
I think we're getting there. And I know there's a lament in the ecosystem of the absence of truly big participation of institutional investors or pension plans. But I would say, from Olivia Stedman at Teachers to the direct investment that CPPIB have done in life sciences, to some of the things like CASE does, like the activity that Omer Ventures do, like they play a role. And to a certain extent, when I look at the venture ecosystem in Canada, I often compare it to a teenager. It's showing great strides. It's got great potential. It's getting there. The size of check is sometimes the issue. They can't be a dominant player. And if they're going to choose to do venture, then they want to write a $200 million check. And there's not a lot of funds in Canada where they can do that. That being said, there's a lot of other smaller institutional investors in Canada. And last year we initiated conversation with a targeted list of regroupings of universities, pension plans, to the bricklayers, to like university endowment, family offices. And those groups are primed to write a 20 to $30 million. So I think a better understanding of the opportunity. And as we go, Douglas, to this period of economic correction and potentially ebbs and flow in terms of the dollars invested, it's my job to continue to tell the story, to put the spotlight on the companies that will emerge from this time.
I want to go back to that point, the teenage awkwardness. And I'm wondering if some of that is, just to get concrete, are you saying that we essentially need more LPs in the market because the current Canadian LPs just can't play at the size and scale, or they are hamstrung by certain limitations in terms of like how much of that money is going to Canadian or maybe Quebec-based or provincially based, depending upon where they are, companies, or even percentage of equity in the fund itself? Or are you saying to grow the pie, we just need more, and that means diversity rather than just bigger numbers?
I think that we need two things. We need time, and people always dismiss or kind of downplay the fact that we have not been at this for long enough to say that we're a mature, like most funds or most GPs in Canada have not raised 4 to 5 funds. And in many institutional investor worlds, that puts you in the category of emerging manager and not someone who's well established. Now, some people will say, Kim, I've raised 7 funds. The rapidity at which these funds have been raised may also be a factor. Have you done this? Have you done this year over year? There's data out there that shows that first-time fund managers actually perform really well. They have their eye on the ball. They've got 7, 8 companies. Everything they've got is going into that lens. And then you add Fund 2, where you have a few companies from Fund 1 that are still with you, and then you're fundraising, and then you add Fund 3, where you have maybe one company from Fund 1 that's still with you, and a few from Fund 2. So as you grow as a GP, the complexity of managing your portfolio and your different funds becomes more difficult. And when you think about Canada and when you think about our ecosystem, we're doing great. Our GPs are doing great. They're putting the right spotlight on the right companies and accompanying these founders and entrepreneurs to their journey. But in 2013, when VCAP was decided and then launched in 2015, when Sam Dubach was in Ottawa having these conversations as the chair of BDC, he was saying, there's no VC money. 2008 is not that long ago. So I think we need to give ourselves a little bit of kudos, maybe a little tap on the shoulder and saying, what we've accomplished since 2008 is good. We have some strong fundamentals. We've demonstrated that Canada, Toronto, Montreal, Vancouver, even Calgary, very dynamic, is emerging as cities where you can build companies, but we're just getting started. And our goal and our vision should be big. And in order to do that, you have to build solidly at the base. So we slow down, we take a breath, we go through this period of a readjustment, and then we come out of it on the other side roaring. And to do that, everyone has to focus on growth and to be very mindful and very thoughtful in terms of their investment and growth strategies, both the investors and the entrepreneurs.
Hey founders, are you considering building your startup on AWS? From Ada Support to Neo Financial, Canada's top startups build on AWS, but they don't do it alone. So whether you're looking for help solving a technical challenge, hiring the right engineers, or finalizing a fundraising round, AWS has all the resources you need to get started. There's a reason more startups build on AWS than any other provider. AWS is here to help you succeed from inception to IPO. To learn more or to start your cloud journey, go to www.aws.amazon.com/startups. Okay, Kim, so all of that said, I guess I now have to ask you the direct question, which I'm going to use as a straw man for us to have this conversation. So I'm going to put it forth in the most direct way possible. Why then do you think that VCCI does not need to be renewed?
I was waiting for that question because I know you had a podcast about what Kim Furlong said last May when the thing was announced.
Yes. Well, I'm glad to know that our podcast reaches your ears, even just for our listeners, knowing that we kind of had you as a target guest on our list for the podcast. And then you called us, and that's the greatest feeling in the world. When the people you want to get on the podcast are saying, hey, I should be on your podcast talking about this.
Douglas, when I was listening to it, I felt like I should be there because I have a lot to say about that. And even at the time, there were a lot of people, even in my membership, that were like, why would she say that? Why would she say that we're done with the fund-to-fund programs? Which is not what I said. And, when you do a written interview, sometimes you don't get the full conversation. You get a quote. And what I said to Sean in that interview is everything remaining equal in 3 years, 2 years, 3 years, 4 years, when we would go back to the government, we would not ask for a stream one again. We would ask for exactly what we needed at the time. And the stream one was created when basically Innovia and Georgian were not even fully formed firms. Like they emerged from VCAP, Vicky, and so what do we need? What do we need from the fund to funds? Now, the dynamics of when I had that conversation with the Globe and where we are now has changed, but my position hasn't changed because for me, even then, I thought in 3 years, we will look at the ecosystem and we'll decide, do we need a stream only on emerging managers? Do we need a stream? Life sciences, for example, we asked for 350 million. They put 50 million in the budget. And we said to them again this year, it's not enough. Actually, it's detrimental because how do you allocate that small amount of money to those players? So I believe fundamentally with everything in my body that these programs should stay the course and the government is not investing in supporting venture. They're not it's not a program for venture. VCAP, Vicky, and the renewed Vicky are programs where the government is investing alongside the private sector. They are a partner. And this is a long-term journey in building this ecosystem. And every time we will go back and have these conversations with the government, we will take a look at what the ecosystem looks at in that moment in time. And CVCA will ask for what it needs for its member in that time. But I will tell you, when you look at internationally, take out the Valley, which is a very special place in the US where even there it was founded in grain and industrial policies. But if you look at Israel, which is always the comparator that we use for Canada, the success of the fund-to-fund programs in Canada versus what the government in Israel has done, you can argue that we've done it better. I look at VCAP, 350 million that the government put in, first in, last out. The fund-to-funds raised 1.3 billion. In aggregate, 347 companies got funded. In aggregate, these companies raised 2.3 billion. Exports, job creation, company creation. Those imperatives, those policy imperatives is what the government wants to see. Government gets all their money back and a return. Even if it didn't have a return, it would still be a full win for a government program. And I would argue that these programs, and Vicky, VCAP, Renewed Vicky, they are an anomaly in what the government pushes out in terms of initiative. And there's no reason why they should ever disappear. They should just adjust to the time in which they're being deployed.
Okay. I wanted to let you kind of go there because obviously we at the same time heard from a lot of Canadian VCs that maybe we should have you on the podcast to talk about this. And obviously we're parsing through the reporting from some other publication that, I don't know, maybe sometimes we have them on our podcast as well. And the quote specifically was that you had said that I'm committed that I will not go back and ask for another general fund. But you'd also said that this is not a crutch the industry should run. I think this is the last time we'll see a major fund-to-fund initiative from the federal government. This actually happened, I believe, a week before the event you referenced earlier in the podcast. And I think the reaction to this when it dropped the day that the minister was making the VCCI announcement was one of, this seems weird, possibly taking out of context. Why would Kim say something like that? And I think the follow-up conversation from this was that you said something relatively similar on stage at the CVCA event, that either this was the last time we're going to see a fund-to-fund initiative from the federal government, or that you wouldn't be asking for it. So I'm just wondering if you could help us parse like where the miscommunication has happened between what you've said publicly previously and then maybe the expectation of the programs going forward. Because as I wrote, the government doesn't usually announce when it stops funding things or is considering not going forward. They usually make announcements when they dole out capital. Was there pressure on you related to this, knowing that the asks that came through with VCCI were smaller than what were made for you for the budget, to, along with this, say that this is like a reduced commitment and you're not going to go back and ask for the similar thing? Like help us understand how we got in this situation where you feel like what you were trying to communicate wasn't being communicated and everyone else is wondering why the head of the organization responsible for advocating for these things was saying this isn't going to happen anymore and you're not going to ask for it.
The first thing I'll say, Douglas, is the use of the expression crutch. I should have not used that word. I'm solid enough and confident enough to say like it was a mistake. And I just thought like for some GPs, eventually in my mind, they'll get excluded from the mechanism. They'll graduate to a space where
cycle out, as you had kind of said before.
It's no longer they don't need it to move on and continue to grow. And there's a few funds in Canada that I think are in that space right now. In terms of me saying we wouldn't ask for it again, I thought that the journey to getting in 2021 this program into the budget was very arduous. It was a climb. Some people got it automatically in terms of decision makers in government. Others strongly questioned the timing and whether we should do it again, and if it was the role of government to do that. So I know that when we go back, we need to have a tailored conversation. I know that the idea of doing another cut and paste, because really VCAP, Vicky, and renewed Vicky, Stream 1 are cut and paste.
New government, same program. Slight modifications to the waterfall. Yeah, we covered all that in like 2017, 100%.
So, and the first one was de-risked, like first in, last out, and then the commitments that the fund to fund after fundraise have changed are now three to one. So it's evolved. There's been tweaks. So I don't want to say like they're exactly the same, and no, there's differences in every program, but at the essence, they're the same. What I said in that interview is that maybe I should have said it a bit differently, but at the core, the essence is that I know that in 2 or 3 years, which is probably when we'll go back and have that conversation with the government, that I will be having a different conversation. In the meantime, I can tell you that for all of those people that don't necessarily see and push back on me when I was climbing that hill in terms of the value of these programs, that is my job as the CEO of CVCA to tell the story of how successful these programs are. And they are, as I said a few minutes ago, not the government supporting venture capital. That's not what it is, period. It is the government investing alongside its private sector in growing an ecosystem that is essential for Canada's economic well-being as we look to the future. And we've already started the work, and we're going to be spending a lot of time and a lot of efforts putting forward this narrative, explaining to people in Ottawa, on social media, because at the end of the day, what I realize is it's a little inside baseball. I know, our GPs know, the fund-to-funds know, BDC know, because they're administering the program. And some people in the ecosystem, that follow it get a sense, but CVC has to do a better job of defining the value of the fund-to-fund programs, and we've already begun to do that.
Kim, I have to tell you, first of all, this is the most inside baseball. This is all we do on this podcast, so you're 100% point well taken. I want to give you the opportunity to just kind of like, in December of 2022, be really clear, and you can be like short yes or no answers here, but declarative statements. You will be going back to the government and asking for either a re-up of VCCI or a continuation of this program, let's say philosophically, if not technically.
We already did in the pre-budget submission. We went back to them and said, you should do a significant investment in life sciences. Our sister organization in Ottawa, BetaKit Canada, asked for $500 million, and we asked for the $350 that we had asked. And then we asked for $100 million for them to consider doing something where BDC would have an allocation where they would be anchors in emerging managers, first-time fund managers, which they've done in the past. So yes, we'll go back to the government, and when we go back to them, it will be another fund-to-fund program. The parameters of it, I can't tell you yet, because we're not. It will be dictated by the environment.
Hey, the parameters are only the parameters when the cash clears, right? And I guess so. As a follow up to that, are you confident that this federal government or future federal governments will support a major fund-to-fund initiative again?
If we found ourselves with a conservative government in town, we would go back and say, you were the architects of this. Minister Flaherty, who was a fantastic minister and a wonderful man, agreed to do this and saw the potential of it, and they should stay the course. And if the Trudeau government wins the next election, we would say, why would you stop? Why would you stop doing this when it has demonstrated not only the returns, but for me, it's you're putting money to work and you're getting your money back and you're hitting all your policy imperatives.
I understand the missing, but do you have confidence that both of those groups, assuming that they were the two parties to win another election, would agree with you?
Yes, I do. And I do because of all the work that we will do, Douglas, between now and then.
I'm wondering if the components of this, if the 3-to-1 commitment which you referenced is a higher bar for firms now or fundamentally achievable. Was that a change that seemed necessary or just easy to adhere to given, as you were saying, like the teenage maturation of the ecosystem? Or is that, in your opinion, a government, again, looking to hedge, commit the same amount, but it generate a broader overall commitment because of the ratios changing from, and just for everyone knows, it's for the commitment through the fund of funds, that partner has to raise 3 times the amount for every dollar committed by the government rather than 2 times the amount, which was the previous VCCI and I believe VCAP as well.
So yes, I think the government thought putting that money to work and amplifying the final outcome by making it bigger was one of their driving kind of imperatives. And I'd like to remind your listeners that this was approved in budget 2021 and was actually announced in 2022 May. If you had gone out to market, if things had moved very swiftly after the budget, raising, it would have been done like almost in a blink of an eye. Like it would have been like a few months, the 4 fund managers going out there, some of the people that had invested with them in the past would have re-upped and then they would have attracted them going to market, and they're not even there. Like they've got the commitments. They're still working on the paperwork with BDC. I expect that in January, they'll be hitting the pavement.
That's a long gap, especially relative to the last VCCI, right?
It is a very long gap. And I think they will be successful, all 4 of them, in raising these dollars because of the success of the program in the past and the LP, the dollars that have come to round out from family offices to institutional to corporates that have played with these fund of funds. It's just going to take much longer. During that time, if you're a GP that received Vicky dollars in the past and you were looking to receive dollars again, there's a huge gap in your fundraising. And you have to ask yourself, do I wait?
Yeah, these are for firms that have to be pretty smart about their windows of opportunity generally for when they align to close. And then obviously in the last 6 months, we've been seeing just an incredible tightening upstream, right? Not from venture capital investors, but also from their LPs. I'm wondering, do you feel that maybe some of the tardiness on crafting this and maybe some of the additional commitments required by the federal government, was it just purely a reflection of when this was being proposed and when they're putting it together, or when this was supposed to drop? It was still in the middle of a pandemic, so give credit there. There's lots of things that the government's focused on, but also at a time where every day, if they're reading BetaKit, which they do, shout out to Minister Champagne, or the Globe and Mail or any other publication, they're just seeing those mega deals and perhaps in that moment not understanding the down the field scenario, saying, why does anyone need more money? It seems like we did it. It's solved. Was this just they weren't skating to where the puck, I guess, needed to be going, but reacting to where the puck was in that moment, which was a boom time of fundraising?
There was COVID. That's on point. They were distracted, and there was other things that Minister Ng, who's the minister responsible, was pushing out in terms of small business programs. The timing. One of the comments was why should we do this now? And they were looking at the last VCAP Vicky timing between the two, and we were coming back faster. And to that we said, because the market is faster. All the GPs are going back to their LPs, and the LPs are actually thinking, how do I do this? How do I create a portfolio construction and deploy this capital when I have people coming back to me sooner than I anticipated? So we were asking in line with what the market conditions were, where you need to do this sooner. There is some element of the success of these rounds, in these exits, and a lot of dollars for some people saying, do we need to play there? But then the rebuttal for us was, this is all great, but most of our GPs are not done through their journey of being emerging. If they were at Web Summit and they were meeting with a bunch of institutional investors, many of them would still say, yeah, you're still kind of an emerging manager. If I had to take a bet on someone around the world, am I betting on you? Or am I betting on a US well-established, 16 funds in? And we said, you need to stay the course. It's a 10 to 12 year horizon when you have a course in textbook VC. That's your horizon for raising, deploying, and returning. And we're not even 12 years in from VCAP.
I think this is one of those inside baseball components that can have real tangible effects. Can you share the definition of what an emerging fund manager is in VCCI language that a common listener would understand? In the federal government's perspective, as it dispenses capital through VCCI, what is an emerging GP? What is an emerging fund manager? Because if you go to the websites and see it, emerging fund managers are all over the place, particularly as it relates to some of their initiatives to create greater diversity in our venture ecosystem. I don't know if it's run yet, but we also interviewed you about the dramatic need to have happen. So help define the emerging component here.
And I don't want to get in trouble. So you're asking me to define something and to create a definition.
To be fair, I don't want you to create a definition. I'm wondering, does the federal government have a definition?
I don't believe that they do. Alison Nankville at the Fund to Fund at BDC Capital may have her own definition, and she invests in first-time managers and emerging manager. If you spoke to her, she would say she has a contingent of her portfolio construction that's dedicated to that. I would say from the Vicky and VCAP program, I don't know if they would invest in a first-time fund manager. That's a question mark, and I don't know if that's ever happened. But they've certainly invested in emerging manager, and I think they would have two categories. What's the thesis? Even if this person is emerging manager, what's their background? What have they done in the past? Who is the team? Because you're investing in not one person. You're not investing in the general partner of this firm. You're investing in, and have they done this before, and how have they done it in the past? How have they been able to come together, and what are the synergies in this team? And really, if you look at textbook, emerging is 4 funds and below. Some people may say 3, but in Canada, I think it's 4 funds and below you remain an emerging manager. And the Vicky program, I would argue, has been quite generous in supporting, and most of the GPs that receive dollar to that program are all emerging managers.
Do you think that definition then, while textbook accurate, is definitionally scoped to be successful here? Like, do you think it's appropriate? Mostly because if you have a question as to whether first-time fund managers could receive capital, isn't that core to the initiative to scoping for greater diversity in funds? That at some point we're doing some net fund creation a little bit, or net fund support? Given the fact that the majority of Canadian VC would be under that emerging label, how do we get new entrants into that to improve the diversity, I guess is what I'm trying to say.
Well, I will remind everyone who's listening, and there may be some people listening that think, yes, they need to do more and they need to really invest in this and they need to really up the ante and give these people a chance. And yes, they should.
There's probably some people thinking you need to do 4 friggin' funds before you're considered a established VC. That would probably blow their minds.
But I want to remind everyone that the beauty of this program and the reason why it works is because it's market-based. And we've had that conversation with the government time and time again in terms of things, that they aspire to see in these programs, especially in Stream 1. If it's not market-based, and if it's not driven by, a portfolio construction that a fund-to-fund would do naturally in order to, satisfy their investors, then it doesn't work. And then the government is picking companies and VCs. And that's why, when that happens, then things fall apart. The beauty of this program, all 3 of them, and the reason why it's so successful, it's because it's market-based. And we will continue, I can say this, as we advocate for this, having market-based conditions for this program has to remain. If it starts being these then will become more of support programs, which I'm not saying are bad. You need them. But the beauty and the success, and when I, travel internationally and talk to my peers and other VCP associations, they ask me about this program, and it's with pride that I describe the way that they're set up, because they stand the test of people looking at them and saying, oh, that's really smart.
Let's talk about that a little bit, because I also want to just peel back the curtain. And this has been so helpful, I think, for our listeners in just understanding how things work. How does a bill become a law? How does money get deployed in the Canadian ecosystem? Because there are early stage founders listening to this and being like, I'm so focused on my startup, I never knew that this is what I was dealing with upstream to get my seed round. The BDC component of this, because the government isn't choosing winners. They've allotted BDC as kind of the intermediary to disperse this and make decisions. At the same time that your requests weren't being matched at the scale that you wanted, BDC is getting $500 million for direct investments into women's initiatives, as well as in an indirect investment fund. And I'm wondering if you feel like some of that was maybe a hedge against specific programs or specific offerings through VCCI, or if they felt more comfortable using that Thrive Fund, Women in Tech Fund, somewhat air quotes established BDC entity from the last 5 to 7 years. I'm going to get 5 emails being actually it was this year. But a continuation of that program more directly focused to those initiatives. And that they, I wouldn't say necessarily hedge their bets, but split the disbursement into multiple programs here, because BDC at the same time is responsible for making sure that VCCI is enacted and then have an additional $500 million of capital to disperse into this ecosystem directly as well. Is that a component here? Because it's not purely market-based if BDC is at the forefront of all the decisions. Correct?
Well, you can ask Michelle. I think she would say that they're market-based, and the way that BDC Capital operates is tantamount to a regular GP, but they're different. Here's the thing. Thrive is fantastic. Thrive is a validation that the work that Michelle Scarborough did with the first Women in Tech Fund was successful, and she's being told, you did great your first time around. Here's capital to continue to grow and to invest in this community of women entrepreneurs and founders. Keep going, you're doing great. It's saying to Alison Dankeville, here's additional capital. When you're doing your fund to fund, we want you to of an allocation to women-led GPs, and more of them are emerging every day. I shouldn't say every day. More of them are emerging because it's not, like you have GPs popping up every day. I would make my association a bit thriving as well if you had GPs on every corner starting.
Well, we needed an emerging GP, and then it would be easier for it, right?
But there's a sense there of if you don't fund them, they won't exist, and if they don't exist, then they won't grow to become. And like I look at Michelle McBain, amazing journey. Her portfolio company had Stand Up. BDC took a chance and was a real backer of her in the early onset, and she had other LPs. I look at Lisa Melchior at Virtue, who's the first woman to launch a PE-backed fund. She's in growth PE, like she's operating in tech. So there's these women out there, and you want to make sure that when it's time to fundraise, that the dollars are there, and they're doing it. They've proven to the market that there was a thesis, and they're doing it. So Thrive and the lab, kind of comes in and will round up is a value proposition that has been proven, that the team at BDC has said, you know what, let's put some resources and allocate it there. The Vicky program is completely different. The Vicky program from the stream one, should have an allocation to diversity and making sure that in their portfolio construction, they'll have to demonstrate and have, report back on who they chose. But that's also very market-based, and they will choose different verticals. They'll choose different managers from seed to growth. It's different.
You're comfortable then with BDC being the centralized organization deploying so much capital into our ecosystem, I guess.
But on the stream one, they're not deploying. They've chosen 4 people that will deploy. So the bulk of the Vicky program is done by someone other than BDC. They bring together an expert committee. They review the application of these fund to funds. They choose them, and then these people go fundraise and they'll deploy. So it's an independent arm.
Independent, but it also so happens to be the same 4 funds that deployed for the last run, right? There is some institutional kind of, if not memory there, like legacy or scaffolding there to parachute us out back from like the weeds of the inside baseball to go to the high level. Because I think you made a really, really strong point before, and I want to make sure we swung back to it, is this idea of communicating to the federal government the value of these programs. Because I think we're speaking to an audience that understands that, if the government puts $1 in, we get $3 more, and those $4 turn to 5 or 7 or 8 or hopefully 10 or something like that. That is a win for the ecosystem. It's money well spent, things like that. But obviously for the average Canadian looking at austerity measures across the board provincially, or just a lot of issues that need to be solved, there's questions here. And I know you spoke pretty frankly about how when you went in to advocate for this successful program and through multiple iterations, sometimes people would receive you well, and sometimes it seemed like it bounced off. I'm wondering, do you feel like the policymakers in control of this capital really understand the economics, how this works downfield? You had mentioned changing the messaging. Is it simply a matter of advocating more and showcasing? Does it have to be reframed for an audience that doesn't get worked up about a BetaKit podcast episode? Like we are within the ecosystem here. How are you thinking about presenting that message or that argument when you go forward next time, or a day by day? I'm not saying this is the only thing that you do, but as you progress with this, obviously you're as you're saying, like in direct contact with the federal government. How are you looking at maybe how you change the structure of that? Because dollar in, dollar out, it should be pretty easy math, but it doesn't seem to be that way.
No, and in some ways, I understand why they're not inside baseball, why they don't understand this. And it's because they
have a country to run. They
have a country to run. And this program, in the grand scheme of the different programs that flow through ISED and, Minister Ng's office as the minister responsible for BDC and administrating this, it's one of multiple things that they'll be juggling. Minister Freeland in 2021, maybe 3 months before the budget, was out saying we need private capital to come and work alongside government. And she was thinking, and at the time it was COVID recovery. And the folks at finance, they got it. They had been there when VCAP was created. They had seen Vicky go through. So the finances, there's some individuals that were like, yes, this makes total sense. I would say it was more a question of timing. When were we coming back? Why were we coming back so soon? And even at finance, I had questions like, should we really be doing this? Is it the role of the federal government to play in the private capital space? And my answer, as I told you earlier, if you're going to be an investor alongside the private sector in building this, you've got to stay the course. Any investor knows that. Like, you can't pull out like halfway. You get in the life of one fund is 10 to 12 years. And I think it was a winning argument. We said, okay. And the metrics, Douglas, on VCAP, even as we were lobbying for this in 2021, were already fantastic. There's very few programs that the government gets their money back, period. Never mind like the return that they make on it. I think that we've already seen a better understanding through the journey of getting the renewed Vicky. I can tell you that some of the conversations that I'm having with Mary Ng's office are fantastic. The people that are the quarterback in her office for this program understand the value. And there was kind of an aha moment last May, especially when I said those comments about us not doing it again. And it triggered a conversation that I believe was really frank on both sides. And it will be a continued conversation. And for me, it's literally my job to explain the benefit of this program, not of this program, of this industry. Because not everyone gets Vicky money. A lot of my members, especially, I got into so much trouble with that interview. People were like, I didn't get Vicky money, Kim. There's many GPs in Canada that never got Vicky money, that managed to raise their fund. And there's not one that's good versus one that's not good. Everyone has chosen their own path and have grown their funds in their own way. My job is to explain the value of private capital in Canada and why it's important. And the fund-to-fund programs, I believe, have been instrumental so far in helping us grow the sector and helping entrepreneurs have access to the dollars that they need to build what they've envisioned for their companies. And it's going to just continue to be a journey of me having these conversations, and everyone else, for that matter, Douglas. Anyone who's listening, from entrepreneurs to other GPs to accelerators, like your audience, I'm sure is a mixture of all these people.
It's pretty inside baseball. Like we've acknowledged it on the podcast.
We should all be on the same page. This is a public-private partnership, and it's a fantastic one. And our ecosystem is solid. The fundamentals are there. And if we do this well, it will be transformational.
We appreciate you coming on. We appreciate you pitching us to have you on. That is a wonderful change of pace. And I encourage everyone listening to this, who we might already have wanted to have on anyways, to send us an email. It really expedites things. Kim, thank you for coming on and being so forthright about just, I guess, the state of the market, the state of your position, your role, and the work that still needs to be done. So looking forward to having you on again in 2023 with perhaps a couple better trend lines. The BetaKit podcast is produced by BetaKit Incorporated. It's edited by Katie Lohr, and its hosts are Rob Kennedy and me, Douglas Saltis. To learn more about how you can support this podcast, head to patreon.com/BetaKit.